Okay, in today's video, we're discussing a question that seems to be thrown out around a lot, and that's gold price collapse, precious metals doomsday. Is this real or is this fake news? And discuss this topic today, we're going to have our recurring guest, Mr. Steve Penny. And so if you have not checked out his free newsletter, it's right there down below, link in the description and pinned to the comments right there down below to sign up. Like I said, I think it's the best free newsletter out there for mining stocks, gold, silver, uranium. It's right there down below in the description and the comments to sign up. And special shout out to our channel sponsor, Vizsla Silver. So if you're looking for a new mining stock, you could always check out Vizsla Silver. So thank you for being our channel sponsor. Without further ado, hit the like button on this side and this side right over there and comment down below, is this real or fake news? Comment real or fake news about this precious metals doomsday collapse. So good to have you, Steve.
Hey, Jake, how's it going? It's always good to connect with you and connect with your audience. So thanks for inviting me on again.
What did you think about my intro? Was that climatic enough?
No, I loved it. That was awesome.
All right, good deal. So first thing on this subject, right, because this is now being debated a lot, which is, gold price collapse, now we're in a bear market for gold and, it's done. Commodities will do well, but gold won't. And is this real or fake news? And so the first thing that I want to ask you that is just, what's your answer?
Well, I think you could certainly call it fake news. My conviction in this bull market has really never been stronger. And, there's no denying the technical damage that has been done on the charts, especially to gold, not so much to silver, but, the fundamentals have not changed. And that's why I'm not concerned. The fundamentals always win out in the long run, despite any kind of short-term bearish technicals. And, I want to preface by saying, it might seem like, hey, Steve's always a perma bull. He's always bullish. That's certainly not the case. And, there's a lot of people I know like that, and they've lost credibility with me over time. So just a reminder for people, like back in July and August of 2020, I was urging caution and I was putting on public Twitter that, hey, we're due for a pullback here. We're very susceptible to a sharp pullback. Now, I did not anticipate a 8 or 9 month pullback like we've seen, but I just say that to say that, I'm not always bullish. When it's time to, when we get a little bit extended, I will acknowledge that. But I think right now what we're seeing is the polar opposite of what we saw in August of 2020. I think, March is very likely going to be the polar opposite and we carve out a bottom in gold. I think that's a likely scenario.
So tell me why this isn't the precious metals like doomsday collapse, why this is fake news. If you had to distill it into a couple things, you said that the macro themes are still there for you. So give me a couple of them.
Okay, sure. And now I just want to clarify that, there is potential for some more downside. I just do think that the downside risk is minimal relative to the upside potential. Maybe we fall another $100 or even $150 in gold, but the upside is measured in the thousands. And the reasons I have that perspective are based on the macro fundamentals. And the first one is just simply supply and demand, especially in silver. I mean, if you look at the principle of follow the money, right? Follow the smart money. What are central banks doing? What are the big commercial banks doing, like JP Morgan? What are high net worth individuals doing? They're accumulating hand over fist. What's China doing? They're accumulating hand over fist. And it's the retail investors who tend to get shaken loose and sell in these kind of environments. And, as we know, physical silver and gold are very scarce commodities. There's simply not enough for everyone to get some when the price begins to move. So that's number one. Number two, go ahead.
I was going to say here that my interview before was with my bullion dealer. They have, I think, 6 shops, they're a big company. They do millions in sales. And he said, no one's even selling. Mm-hmm. He's like, I don't have anyone selling me gold or silver while the price is going down. He said, the only people that are selling are the people that they're selling for food or they're selling to pay their rent or their mortgage. He said, no one's coming in getting out of gold right now. So I just wanted to kind of back that up with what I heard. But please go ahead to your second point.
Yeah. And just to piggyback on that too, a little bit of a sidetrack, but there's a big push today about the PSLV movement. And it's part of the silver squeeze movement. I'm not sure if you've tracked that at all, but the idea is to get people to buy PSLV, which is the Sprott Physical Fund. And the idea is they buy 1,000-ounce bars to take them off the market because we've seen the shortage in retail supply. And there has been a shortage in commercial bars, which are 1,000-ounce bars, but it's just not to the extent that we see in retail. And really, if we can see that squeeze in those 1,000-ounce bars, that's where you pit the industrial users like Tesla, Samsung, General Electric, all those guys against the banks. That's a battle I'd like to see unfold. So the PSLV movement, I'm all for that. But one thing I would caution is please don't construe owning PSLV as a substitute for owning physical that you can get your hands on that's stored outside of the banking system. In a worst case scenario, PSLV isn't necessarily going to be what you want, although there's a place for that. That might be a little bit of a side note. But the second point I was going to talk about here was just simple historical precedent. I mean, silver and gold have a 6,000-year track record of thriving in this exact environment. What we're seeing now is just a repeat of normal cycles that have unfolded throughout history. And silver and gold always 100% of the time do a full accounting for the expansion of debt-based fiat currency every single time. And there's different ways you can measure that. But like right now, if you took the M1 money supply divided by the amount of ounces of gold that the US supposedly has, you come up with a number about $15,000 gold. And that number is even larger if you use M2 money supply. And historically, that's what happens. You take the money supply divided by the number of ounces of gold that a nation has, and that ends up being the price. So, we've got historical precedent. If gold and silver, if this were the end of the bull market, this would be a historical anomaly that has never happened before. Gold and silver always do an accounting for that expansion of fiat money supply.
So on that subject, where do you think the next moves are for governments and central banks right now with, an incredible amount of people that simply, they can't even pay their rent or mortgage. Then you take in the developing, the third world countries that are, so much relies off tourism. That's been gone. You're talking about a huge percentage of the portion of the population, a large chunk, a lot, people always talked about how poverty was so bad before. It's going to be a lot worse from what they've done. And, this has brought a whole new class of people on the verge of poverty globally. Mm-hmm. And, there's these talks of the stimulus. $1.9 trillion stimulus is not going to fix any of this. I mean, none of it is going to fix any of it, let's say. But this is going to, in the short term, be something that has to happen to keep people from off the street. You talk about infrastructure. So what do you think infrastructure bills as well being needed to basically give people jobs to stand around because there's so many people aren't going to have jobs. What do you think the next moves are for governments and central banks here in 2021?
I think the next move is probably that stimulus bill looks like it's going to pass very soon, the 1.9 trillion, followed by probably yield curve control by the Federal Reserve or some form of more aggressive debt monetization and currency creation, followed by probably a stimulus bill. So those are three big catalysts that are very likely on deck for 2021. And I think the Fed and governments are approaching a point right now or very soon where they have to choose between either allowing inflation to run hot or pricking the everything bubble. And I think history suggests they're going to choose inflation. That's what they've indicated they're going to choose. Now, you could make a case, ever since Lynette Zhang said that on your show, I've been thinking more about this. Perhaps they want to let everything collapse now. But so that's an outside possibility we should be aware of. But I think the more likely scenario is they choose inflation over a pricking of the everything bubble. And of course, gold and silver and commodities will benefit when they show their hand, and that happens.
So what do you think right now with what's going on where, you see sentiment shift? Personally, I'm thinking things go a little lower. I haven't been in the physical bullion market in a while. So although it's hard to source any of it at these prices, it does get me a bit excited. So that's one of the things on my strategy. I'd probably reload on some physical, but give me an idea. You've addressed this term where you think that this talk of precious metals doomsday is fake news. Now, what are the strategies for right now when you see this type of price movement?
Yeah, and that's a really important question because I think more important than predicting the short-term move, the next short-term move is having a strategy to handle whatever may unfold next. So I think your strategy is always more important than short-term predictions. And like, for example, right now we see, so let me preface that by saying that I am heavily focused on junior silver miners and silver, as I feel over the long term, they have much more upside potential. But in the short term, right here, right now, I think uh, somewhat surprisingly, the senior gold miners and the royalty companies, the top tier royalty companies, present the most compelling setup. Because I think, they're just so beaten down right now that even if gold were to fall another $100 or so, which is certainly possible, I think the downside risk is minimal in a lot of these top tier royalty and gold companies. Where if silver were to fall more, I think some of the junior silver miners could see more short term weakness. But over the long term, I'm not concerned for either.
Yeah, they are presenting some compelling opportunities here, getting closer and closer. Now, so where do you stand on your personal feelings for 2021 for precious metals? You're seeing gold, back in the 1700s. Do you still stand by your feelings that it will eclipse 2000 and that silver can still compete with 50?
I do. I mean, obviously, with the technical damage that's been inflicted on the charts, that's obviously less likely, but I still think that it's very possible, if not likely. It's just less likely than it was a few weeks ago. But, it's very characteristic of silver to make really fast, sharp moves that surprise everyone. And gold made a new all-time highs in 2020, and it's typical of silver to lag. So I would fully expect, put it this way, I wouldn't be surprised at all for silver to touch 50 this year. And silver is the only commodity on the planet, to my knowledge, that's still trading below its 1980 high. And it's still like 50% below that. It reached $50 in 1980. We're at, 25, $26 now.
That's an amazing stat to say that again.
Yeah, silver, to my knowledge, is the only commodity on the planet that is trading less than its high in 1980. And we're not talking just a little bit less. We're talking like 50% below its 1980 price. Think of all the currency creation and inflation that's been injected into the system over 40 years. And you've got a small commodity like silver that's in high demand right now, trading at half its all-time high. I mean, from a longer-term perspective, silver, there's nothing I could possibly be more bullish on than silver and the silver miners, despite any kind of short-term moves. And that gives me the conviction to hold through any kind of downside volatility and not lose any sleep.
So I was talking to my bullion dealer before, and ever since I started buying it, and the first time we had a sales call where I was buying from him, he said, it's going to be unobtainable and the spreads are just going to get super, super bad. And then there's going to be a time when it's not there. And I always felt like it was a sales pitch. I was always like, yeah, okay, maybe you could be right, but I'm not banking on that. And the ironic thing is, very quickly, we've gotten into a type of position like that. As you said a moment ago, that silver is something that you are most bullish on. Give me your top reasons why you are most bullish on silver.
Well, number one is historical precedent. The gold to silver ratio in bull markets typically comes down to about 15-1 is where it peaks. And we're currently at like 65-1, which makes silver historically cheap relative to gold and relative to almost everything. So silver is the most undervalued asset on the planet from my perspective. Number two, it's got the potential for huge speculative mania and to overshoot, its normal valuation to the upside. If I feel like the crypto people, and I have nothing against crypto at all. In fact, I love seeing my crypto friends make a ton of money. But I think a lot of them need to take a look at silver because a lot of the characteristics that drew them to Bitcoin also apply to silver. I mean, silver is ripe for a speculative mania. There's so little silver on the planet, and it's a global market. And when just a small percentage of the population just wants a little bit of silver, I mean, the potential is enormous for a speculative mania. So that would be a second reason. And then number two, silver is money, and people are, number three, silver is money, and people are going to lose confidence in debt-based fiat currencies. The governments of the world and central banks have no choice but to continue debasing their currency. And eventually, people are going to look for alternatives, and they're already starting to do that. They don't want to hold dollars, hold fiat currencies, and silver is the natural, place to turn for that.
So right now, you and I have talked previously where you illustrated your ups and downs investing in mining stocks and commodities, and you detailed, the huge bull market run ups and times when the bottom has fallen out, and all of that being you've learned a lot of wisdom from the investment standpoint, but your emotions and your mindset into your investing. What do you think is most important right now for someone that's investing in gold or silver or other commodities? What's most important as you're seeing this price movement? Of course, you have a newsletter, and you're serving thousands of people with that, so you're probably seeing a lot of questions. Then the sentiment goes, "Oh my God, it's going down, sell it all quickly."
Right.
What are the most important things looking back on your past that you think are worthwhile now?
Well, number one, and I've stressed this hopefully from the beginning, is that the importance of having an individual personalized plan, and specifically an exit strategy long term, but just a plan for accumulation, a plan for how you're going to handle downside volatility. And there's no one right answer, but there are several right answers. Personally, for me in this environment, I've been telling our members, I've got some cash on the side, and I'm scaling in small positions, and I'm averaging down. Now, that's not the only strategy. Another viable strategy I've been telling our members is, hey, you might wait for a trend reversal. There's nothing wrong with doing nothing here and waiting for a confirmed bottom. And you don't have to try and nail the bottom. So you could just wait for price to get back up above a 200-day moving average and mark a new high. And that would be a much safer entry point, although you would potentially miss out on some gains, but it's a more conservative approach. So the importance is having your own plan that makes sense for you instead of just winging it in the heat of the moment when emotions are running hot.
Okay, so for someone that's listening to this, maybe the first time you and I do a lot of work together, but maybe the first time they heard it, or maybe they heard you discussing your own personal written investment plan previously, but they didn't do it. So for someone listening right now, as we kind of come to a conclusion here, and they said, all right, I'm going to go ahead and I'm going to do that right now. That's a smart thing to do. Let me take 10 minutes right now. I'm going to pull out a journal and I'm going to do that. How should one begin that?
So number one, assess your risk tolerance. For example, if you're someone who's older and approaching retirement, you probably don't want to be as aggressive as someone who's in their 20s and has a whole career ahead of them if they were to mess this up. So assess your risk tolerance, and then decide how aggressive or conservative you want to be. More conservative investors will probably be better off, waiting. Not necessarily jumping in now, but waiting for a confirmed reversal before accumulating or adding to their positions, where the aggressive people can keep buying dips.
Got it. So first is to assess our risk tolerance. So what would be another important component of someone that's illustrating that for themselves, that's putting together their investment plan or their exit plan or whatnot?
I'm sorry. Could you say that one more time?
What would be a next step? You said risk tolerance. So someone that says in conclusion here, that's great, I'm going to go ahead and I'm going to build my investment plan. What would be another thing for someone that wanted to spend the next 10 minutes kind of formulating it other than risk tolerance?
How about I could recommend a good resource that walks you through all this. So a book that really helped me to craft my own exit strategy is, and I know you've had these guys on the show before, and I look up to them a lot, David Morgan and David Smith, and they wrote a book called Second Chance. And the biggest takeaway for me in that book is how to craft your exit strategy. And it's less about all the compelling fundamentals for a bull market, but really how to personalize your strategy. And that book's been instrumental in my own thinking.
Awesome. Okay, so we'll put the link down below for everyone that wants to check that book out. I know you mentioned it before, so I'll put David's book in Amazon link right there down below to check out Second Chance. Now, for everyone listening, we're going to have a multi-part series here with Steve on. Right there down below, you can leave us your gold and silver price predictions for 2021. And I want to encourage everyone to head over to Steve's free newsletter. Every time we do these interviews, I always mention it, but if the first time you heard it or you just haven't done it yet, I have to tell you, it is the best free newsletter out there for mining stocks, precious metals. Steve's went through some amazing ups, some amazing downs. And so he's really is a wealth of knowledge, and he has a free version that is better than, I'm subscribed to a lot of newsletters. It's better than most paid ones And it's a great place to begin, whether you're looking to add on the dips, whether you're looking for some wisdom, with the volatility, or whether you're new here and you think that precious metals or commodities create a compelling entry point right now. I highly recommend you start off with Steve's newsletter. It's called Silver Chartist. I'll put the link right there down below in the description and pinned to the comments right there down below to join for free. Now, make sure you hit the like button over on this side right over there and this side right over there on this side. And thanks for coming on, Steve.
You bet. Thank you so much, Jake. Really appreciate it.